Welcome back to the Investor's Library, where we dig into some real investing wisdom from great books.
Yeah, we always love a good book.
Absolutely. And today, we're going to crack open The 80-20 Investor by David Schneider.
Oh, this is a good one.
It really is. And, this book might be your new best friend if you ever feel like investing is just too much information.
Too much to keep up with.
Way too much work, right?
Yeah.
So this book kind of argues that just a handful, like a small handful of big decisions can really make all the difference.
If you know what to look for.
Exactly, if you know how to spot them. And that's what we're going to explore today, how legendary investors use this approach and how, you listening right now can apply it to your own portfolio.
This 80-20 principle, that idea that 80% of your results come from just 20% of your efforts, that's powerful stuff. And Schneider really shows us how it works in investing.
Yeah, it's not about just constantly buying and selling, is it?
No, it's about finding those really big opportunities and then, having the patience to hold on.
So instead of being glued to your screen all day, watching every little market tick, you're looking for those game changers.
Yeah, the investments that can really move the needle.
Exactly. So the book shares some really fascinating stories, about investors who did just that.
Oh, yeah.
Like, take the Rothschilds, for example.
Oh, the Rothschilds.
They built a banking empire.
Obviously.
But they also knew a good deal when they saw one.
Oh, for sure.
So during market panics, when everybody was running for the hills, they were, get this, snapping up the best wines.
At fire sale prices, basically.
I mean, come on. Using their financial strength to get amazing deals on something they enjoyed,
That's smart.
That's pretty smart.
That is smart.
It sounds like they understood, to stay calm when everyone else is panicking.
Oh, absolutely. And that leads us to another incredible investor, Hetty Green. She was known as the Witch of Wall Street.
Oh, wow.
So imagine, a woman in the Gilded Age.
Oh, yeah.
Thriving in what was very much a man's world.
Yeah.
Making really savvy investment moves while others are, losing their shirts.
She must have nerves of steel. What was her secret?
Cash. She understood the power of cash.
Really?
Hetty Green kept a large cash reserve, so when markets crashed, she was ready.
Oh, but she was ready to pounce.
She would buy up undervalued assets, focusing on areas she believed would grow in the future. A true contrarian investor, going against the crowd and profiting from it.
That takes guts to see opportunity where everyone else just sees disaster. So it's not just about picking the right investments, is it?
Yeah.
It's also about being prepared for those moments when you can buy low.
100%. And speaking of buying low, the book also tells the story of J. Paul Getty.
Okay.
The oil tycoon.
Oh, yeah.
So he focused on what he knew best, oil. He patiently rode out market fluctuations, achieved those impressive returns year after year.
Sticking to his circle of competence, right?
Exactly. Not getting distracted by the latest trends, just focusing on what he understood deeply. That's a lesson a lot of investors could learn from today.
I think so, too.
Don't you think?
I absolutely do.
But not every investor is a Getty, content to stick with one industry. So the book contrasts him with Henry Singleton, nicknamed the U.S. Condor, because of his ability to adapt and change course.
So he wasn't afraid to, shift gears?
Yeah. He didn't cling to rigid plans. He saw opportunity in shifting markets and wasn't afraid to pivot.
So flexibility is key. Not being afraid to change course when the market throws a curveball.
That's it.
That's encouraging for those of us who aren't, oil tycoons.
Yeah.
Means we can adapt and still find success using the 80-20 approach.
Precisely. And the book makes it clear that these successful investors, they weren't superhuman.
Right.
They just made a few key decisions exceptionally well. They understood that less can be more, focusing on quality over quantity.
So it's not about trying to be right all the time or constantly trading.
Yeah, no.
It's about identifying those few high-impact decisions that can really drive your returns.
Yeah, you got it. And even in today's fast-paced market, this principle, it still holds true. Think about Warren Buffett and Charlie Munger, right? They're famous for focusing on just a few guerrilla ideas each year. They do their research, find those companies with real potential, and then they hold on.
Hold on for the long haul.
The long haul. It's amazing how a few well-researched decisions can outperform, just constant trading.
Makes you wonder what those guerrilla ideas are in today's market.
Doesn't it? And it reminds us that patience is a virtue in investing.
Oh, for sure.
Take Jerry Yang, for instance. He bet big on Alibaba, even when it meant losing his job at Yahoo.
Wow.
His belief in Alibaba's long-term potential paid off massively.
Talk about trusting your gut, but I mean, it was probably more than just a gut feeling, right?
Oh, yeah, absolutely. He did his research, understood the market, and had the conviction to stick with his decision, even when, he was facing pressure.
Yeah, when things were tough.
And the 80-20 principle, it's not limited to just picking stocks. The book also features Brendan Tully, who saw the potential of server hosting early on.
Oh, really?
And built a very successful business around it.
So whether it's starting a business, investing in real estate, picking stocks,
Yeah.
this principle of focusing on those high-impact decisions.
It can apply across the board.
Yeah. It's about identifying those key areas where you can really make a difference.
Exactly. But before you can start looking for those guerrilla ideas, you need a solid foundation, right?
Right.
And that's where the book's emphasis on building a cash portfolio comes in. Schneider stresses the importance of saving, diligently and consistently.
So saving isn't just about being responsible. It's actually a strategic advantage.
Huge advantage.
In investing. It gives you that flexibility to seize those big opportunities when they arise without having to scramble or sell other assets at a loss.
You've hit the nail on the head. It's about being prepared, having the resources ready to deploy when those no-brainer opportunities present themselves. And that's what we'll delve into next.
What are we going to talk about next?
How to identify those opportunities and what to look for in today's market.
Sounds good.
Yeah. All right, so you've got your cash reserve built up.
Got it.
Now, how do you find those investments that really,
The ones that really make a difference.
that move the needle? So Schneider lays out 5 magic categories to look for.
5, okay.
First up is personal expertise.
Okay.
This is where you have an edge.
Okay.
What do you know better than most people?
So leaning into your strengths, your passions.
If you're really interested in something, you're more likely to put in the time to understand it deeply.
Makes sense.
Right.
Yeah.
Passion can lead to profits, as they say.
Yeah, they do say that.
Now, the second category, this one might seem a little daunting.
Okay.
Global stock market panics.
Oh, okay.
Think back to 2008 or any major market crash, right?
Yeah.
Scary times,
Right.
but they also created huge opportunities for those who had cash on hand.
That's the buy when there's blood in the streets mentality.
Exactly.
Easier said than done, though, right? When everyone's panicking.
It does take courage, but remember, you've prepared for this. You've got your cash reserve, you've done your research, and you're ready to act when others are frozen.
Makes sense.
Now the third category focuses on single country panics.
Oh, okay.
The book gives us a great example of Carlos Slim,
Yeah.
who made a fortune during the Mexican recession.
Mm.
So even in a crisis, there are opportunities.
If you know where to look.
You got it. That brings us to the fourth category, shunned asset classes.
Shun.
When everyone hates something, that's when it might be time to take a closer look.
Like Bitcoin back in the day.
Exactly.
Mm.
Sometimes the biggest gains come from going against the crowd. So what do you think the final magic category is? Fund manager crises?
Oh, okay.
Even the best fund managers have down years, right?
Right.
And that can create an opening for you.
For the individual investor.
Exactly. When a top performer stumbles, their funds often become undervalued. So it's a chance to get in at a discount, betting on their long-term track record.
So you're kind of taking advantage of the market's short-term memory.
Yeah, betting that the manager will eventually bounce back.
Interesting. It sounds like all these categories require a certain level of confidence.
I do.
And patience.
Yeah, a lot of it.
You need the conviction to hold on to your investments even when things get rough.
You do.
Because you believe you've made the right decisions.
You got it. Confidence and patience, they are crucial for the 80-20 approach. But they're not easy to come by, especially in today's world, right?
Yeah, instant gratification everywhere.
Exactly. So Schneider emphasizes the importance of developing your circle of competence. This means focusing on areas that you truly understand, where you've done your research, and you can make informed decisions.
So how do we figure out our own circle of competence? Where do we even begin?
It starts with your interests.
Okay.
What are you passionate about? What industries or sectors do you find yourself naturally drawn to?
Okay.
Maybe you're a tech enthusiast, a healthcare buff, or, you have a knack for understanding consumer trends.
So my love of video games could actually turn into like a profitable investment strategy.
It absolutely could. If you're passionate about gaming, you're probably already reading industry reports, you're following the latest trends, you understand the companies involved. That passion gives you a head start in developing your circle of competence. Then it's about, diving deeper.
Yeah, doing the work.
Read books, go to conferences, talk to experts, right? The more you learn, the more confident you'll become in your ability to, spot opportunities that others might miss.
So it's like building a mental model of the industry.
Exactly.
Understanding what drives success, what the risks are, and where the potential lies. But how do I know when I've actually mastered, a particular area? Like when am I ready to actually put money on the line?
That's a great question. It's not a one-time thing. It's an ongoing process.
Right.
You're always learning, refining your understanding. But one sign is when you can explain the industry or company to someone else in a clear and concise way. When you can articulate the key factors that drive value, that's a good indicator that you're on the right track.
And maybe even more importantly, being able to recognize those situations when it's better to walk away.
Yes.
To say no to an investment,
Crucial.
even if it seems, tempting on the surface.
That's a crucial point. Avoiding big losses is just as important as making big gains.
Right.
The book highlights the importance of saying no, of resisting that fear of missing out. An 80-20 investor isn't chasing every hot stock tip. They're patiently waiting for those rare opportunities that align with their expertise and risk tolerance.
So it's about having the discipline to stick to your plan, even when it feels like everyone else is getting rich quick.
Yeah.
That's easier said than done, especially in today's, social media-driven world.
It's not easy.
Everyone's talking about,
Yeah, but it is essential for long-term success.
Yeah.
Remember, the 80-20 investor is playing a different game. They're not trying to time the market or outsmart everyone else. They're focused on building a solid foundation, developing their expertise, and patiently waiting for those high-conviction opportunities to arise.
This is all starting to make a lot of sense, but it also requires, like, a certain level of self-awareness.
Absolutely.
Right? Like understanding our own strengths and weaknesses as investors.
100%. The book encourages us to reflect on our past investment decisions, the good and the bad, right? What worked, what didn't. By analyzing our own behavior, we can identify patterns and biases that might be holding us back.
Oh, interesting.
Maybe we tend to get emotional and sell too soon, or maybe we're too afraid to take risks.
So keeping an investment journal could be helpful.
Yeah, that's a great idea.
Tracking our thoughts and the reasons behind our decisions.
It can help you become more objective and disciplined in your decision-making.
Right.
And it can provide, valuable insights into your own investment style and risk tolerance.
So what are some things you think you should be saying no to in your investing?
Yeah.
What are those red flags that make you hesitate, even if it seems like a good opportunity?
That's a great question. I think for me, it's those investments that everyone's hyping up that I just don't understand.
Right.
Or maybe it's a sector that's outside my circle of competence.
It makes sense.
I'm starting to realize that saying no can be just as powerful as saying yes when it comes to investing.
Absolutely. Developing the discipline to say no is a crucial skill for any investor, especially those following the 80-20 principle.
Couldn't agree more.
It's about recognizing that not every opportunity is right for you, and that's okay.
That's okay.
You're waiting for those select few investments that align with your expertise and your goals.
Precisely.
So we've covered a lot of ground.
Yeah.
Talking about the principles behind the 80-20 investor.
Yeah, how those legendary investors use them to build wealth.
We explored those 5 magic categories that can signal, those big opportunities.
For sure.
And we talked about, having that cash reserve.
Having it ready.
Ready to deploy, exactly.
All about preparation.
And you gave us some great advice on, developing our circle of competence.
Right, and resisting those, resisting the temptation to chase every hot stock tip.
Exactly.
Okay.
Because remember,
it's not about being right all the time.
It's not. It's not. It's about making a few key decisions.
Exceptionally well.
Exceptionally well.
So, the book goes even deeper, right?
Oh, yeah.
Offering specific strategies for building a watch list of potential investments. It walks you through, conducting thorough due diligence, understanding a company's financials, assessing its long-term prospects.
And it really digs into, the psychology of investing.
Yeah.
How to manage those emotions.
Because we all have them.
Absolutely.
And avoid those common biases that we all fall prey to.
Because let's face it, investing, it can be an emotional roller coaster.
It can be. It can be.
But the 80-20 investor really, it gives you this framework.
Yeah, for making those
rational, informed decisions.
Even when the market's going crazy.
Yeah, for sure. So if you're ready to simplify your investment approach and focus on those high-impact decisions, I highly, highly recommend giving this book a read.
I second that.
It's such a valuable resource, for anyone looking to build that long-term wealth.
Without getting caught up in the day-to-day noise.
Absolutely. So as we wrap up this deep dive into the 80/20 investor.
It's been a good one.
It has. It really has. I want to leave you with this thought.
Okay.
In a world that's just obsessed with constant action.
Right. Always got to be doing something.
And trying to outsmart everyone else.
Yeah. Beat the market.
Maybe, just maybe, the real key to success in investing
is doing less.
It is. It's about focusing on what truly matters.
Developing that expertise.
Having the patience to wait for those exceptional opportunities.
Because they're out there.
And when those opportunities come along, to act decisively.
Knowing that you've done your homework.
Absolutely.
And your investment decisions, they're aligned with your long-term goals.
That's the essence of the 80/20 investor.
Until next time.
Happy investing.